$10 trillion is an eye-popping number. So can you kind of explain how you came up with that number? What percentage of that $10 trillion is cryptocurrencies, and how much of it is sort of the related ecosystem around blockchain and crypto?
So I think the vast majority is actually on the ecosystem. So what I'm trying to describe in that report is essentially creating a decentralized world computer. So I think what people misunderstand about the cryptocurrency space is it's not just a store of value, which I think you guys have done a very good job of covering, but it also allows you to secure the internet. So essentially right now we trust third-party providers such as iCloud or Dropbox to hold our storage and photos and things like that. But in the future, we'll be able to do this for free, essentially by using something like a file coin or a different type of coin, whatever it's going to be called. And so essentially that market, you're starting to approach IT spending. And so when I think about that market as well as the store of value, which alone is already a $30 trillion TAM, if we include the amount of money that's held in overseas banking, we get to a very small number of 10 trillion, which is basically 33% of just the store of value use case.
I think the example in your report about Dropbox is a very interesting one because most people can relate to that. The notion that Dropbox is centralized because anybody with access to the Dropbox servers actually has access to your data that you're storing on Dropbox, whether it be photos or files or what have you. And this could really decentralize it in that no longer will that person with access to that server have access to your information. How fast can we see this ramp? Because implicit in this call of this decentralized information is sort of a displacement of a lot of other companies and business models out there, like a Dropbox.
Right, exactly. So that's why you see a lot of companies not really interested in talking or investing in the space because they're going to essentially become a node in the network at long term, right? So I think that my $10 trillion call is obviously a multi-year call it 10 to 15 years or something like that. We'll see a lot of ups and downs as many of these decentralized applications will essentially be worthless. But when we think about the blockchain, at least the one thing that the bulls and bears can agree on is we have a $7 trillion or $700 billion market that has never been hacked. So what people are now doing is they're building on top of that network, and that increases the value tremendously because now we've built a new level of the internet. That's why they call it the Web 3.0 that will not be hackable. So now you are able to not only get rid of kind of the middleman in the center, but you're also able to monetize that through the coin network, essentially.
Hey, Mitch, it's Brian Kelly. So interesting report that you came out with today because Mark Zuckerberg came out today and talked about decentralized computing. How vulnerable is somebody like Facebook to this phenomenon, to a decentralized world computer?
I wouldn't say they're really vulnerable, right? Because they have a different ecosystem and that's covered by a different analyst at RBC. But I would say that the decentralized network in general is going to be a very big topic because you can essentially now have anybody have secure computing, right? So I think that's a very big topic. So a good example I give you from a social media perspective is Twitter, right? So we had a rogue employee take down the President of the United States Twitter account because he was upset when he left, right? So while that's funny and humorous to some people, we have to ask ourselves, why are we putting ourselves in that situation in the first place? So if we can get rid of the middleman in that case, now we've created a secure layer for everybody to get value out of.
Another part of your report is the whole mining aspect of it and the computer chip companies, the chip companies that specialize in these mining chips. But in terms of investing in publicly traded companies now, Mitch, are there ways to invest now, or is it simply too early? Is really the cryptocurrency itself the best pure play way?
So the best pure play way is certainly just getting involved in the cryptocurrency space because at the end of the day, if you're going to invest in something related, you have to go the mining route. So AMD and NVIDIA chips are used to mine cryptocurrencies called Ethereum, Monero, Bitcoin Gold, not Bitcoin, and several other currencies, while an ASIC is being used to mine Bitcoin. So if you want to be very specific and try to get exposure to the mining aspect, there's definitely ways to do that. But from a public company perspective, the way we have to think about this in terms of the bigger picture is we're rebuilding the internet. So if we're rebuilding the internet, what does that mean for compute, for networking equipment, and for all these other technology devices that we have today? It means the demand is going to increase for that across the board.
What does it also mean for the companies like a Dropbox or equivalent publicly traded companies like a Dropbox? Because this is going to mean dislocation of these companies.
Yes, they're going to see significant competitive pressure now because essentially people are going to decide, do I want my storage to be centralized or do I want it to be decentralized? And I think this is going to be a very big topic over the next several years, because now it seems like people are starting to understand the difference between protocols like an Ethereum or a Lisk or a EOS or a Cardano, and realize that that's not the same thing as the currency aspects like a Bitcoin or a Litecoin and things like that. So I think Wall Street's waking up to that. And so companies with centralized computing or centralized storage are going to have to adapt to the new ecosystem if they succeed in scaling.
Cloud companies,
sure. So
for
cloud
instance?
companies. Yeah, exactly. So cloud companies would definitely be impacted by this.
All right. Mitch, thank you. Last time we spoke, Mitch, in the first note that you put out on Bitcoin and the blockchain economy, your projections were for $10 trillion. Does that ratchet down at all given the bear market that we've seen in Bitcoin or cryptocurrencies in general?
No, I don't think it ratchets down at all. In fact, I kind of get a good idea of who understands the space based on the kind of declines, right? Because if somebody invested in Ethereum at the beginning of last year, let's say the price is $275 today and cut it in half, you still would have gotten a bigger return than investing in the S&P 500 since 1978. So basically, calling that a decline is pretty outlandish to me, because you're looking at a year-and-a-half return that's better than 50 years of equities returns. But if we look at this over the next several years, there's still going to be a lot more development that needs to come. So, for example, using blockchain in a centralized environment is kind of the first step, but it's going to take another 2, 3, 4, 5, 6, maybe even more years before we see a decentralized environment where in the future, somebody like yourself no longer has to give their photos to Facebook or to a central entity. Instead, you can just share that photo specifically with people, and then you'd be able to track it and make sure that it's not shared with somebody else who gets access to your information.